Yes, hello all. So, here is a surprise live streaming, that is a live session that we are going to have on YouTube for the ATX students, and it is going to be for one of the most important topics that comes as regards to the planning portions, because you know that ATX is mainly focusing on planning, that is understanding the concepts, doing the planning, implementing the concepts is the key for ATX. With this, I see Anshubudya. I'm going to starting with this topic right now with all of you who are present live to attend this very important topic. Okay, so as you can see, there are questions listed here, and with this, I'm going to be parallelly taking some, the background pointers also. Though this chapter or this topic has got nothing new to understand, what we are going to be doing here is we are going to take a multiple questions here, and we are going to be solving these questions here with me in the class by probably merging together like many topics, right, generally relating to these individuals taxation only, so that we are able to solve them, we are able to understand them, and we are able to implement them with flawless smoothness. Okay, so with no glitches, I mean, no technical issues, we should be in a comfortable position to deal with all those questions. Hi, good evening, everybody. Okay, now with this good evening note, my first question to everybody, guys, can you hear me properly? Is my video okay? Because as we progress, I want your focus only on questions, only on handling them, rather than focusing, ma'am, video is not working, ma'am, audio is not working, nothing like this. So I want the comments, the chats also relating to it. Just give me a confirmation, everyone. Is it going fine? Quick. I want this confirmation. Can you all see the screen? Can you all, hear me? And no glitches, right? Okay. Thank you for confirming. Okay. So now let's start. Let's start doing the questions now. One of the very crucial topic that we are taking. So first question, and I'm going to be taking back-to-back planning questions. Okay. Some portions even I will be requiring your help, where I would say maybe this small, solve this small part and tell me the answer. Okay. And at some portions, many portions in fact, I will be doing the questions. Okay. Yeah. So let's proceed. And it's better if you can do those questions on Excel also, so you will have a practice parallelly as well. Okay. Now let's start solving them. Yeah, so the first question I'm taking is Henrik and Kate are a married couple. Okay, before I begin, I'm sorry to interrupt, but there is one pointer that is coming to me, and that is many students they read the question very wrong. The way that I started reading, you all also start reading the same way in your exam, but which is completely wrong, my friends. Then what is the correct approach, ma'am? The correct approach is just read the question backwards. This will help you save your a considerable time. Okay, so let's read the question backwards. What is the requirement of the question? Requirement of the question should be read first along with the marks. Okay, the requirement of the question is calculate the income tax savings which could be achieved in a complete tax year if Hendrik was to follow his friend's advice and give 150,000 to Kate. Okay, so this question is basically about the married couple's tax savings. Next, in order to do this efficiently, you should just calculate the additional tax payable by Hendrik and Kate on the income generated by the inherited funds rather than preparing complete income tax computation. So we are not going to be preparing the complete income tax computations. We are going to be doing questions. Okay, we are going to be only working on the additional income part. Okay, if you have any questions, if you have any queries, feel free to ask me quickly. Then let's begin. Henrik and Kate are a married couple with the following income during 25-26. Annual income for Henrik and Kate is given. Employment income, bank interest which is within IAC, dividends which is within IAC is given to you. Henrik recently inherited 300,000 following the death of his father. He plans to invest 200,000 of this in UK shares which is earning 4% yield per annum, and remaining 100,000 will be left on the cash deposits which is going to be earning 1% per annum. A friend has suggested that Henrik should alter his plans to reduce his family's income tax liability. Focus on family's income tax liability. He says Hendrik should gift Kate 150,000 of his inheritance, and that they should then invest two-thirds of their funds in the remaining, and with the remaining third being left on cash deposit. So 2 by third into the shares and 1 by third in cash. This is the plan for second. Now one first question that can be like a very general question asked by many students can be, ma'am, do we need to calculate inheritance tax here? Really don't, no need to calculate the inheritance tax here. Okay, because the question is not asked, so we'll not do any additional tax calculations. So what instead we'll be focusing on, we will be focusing on the two approaches. Okay, the two options. First option is to invest entire amount of 300,000 by Hendrik. Okay, the investment of full 300,000 by Hendrik, and the second is to gift 150,000 to Kate, so that they each do the investment. So overall, then what will be the savings in the couple's income tax that we need to calculate? Okay, the best and the easiest way is just see first if Henry is investing 300,000 himself and not um, investing through Kate, then what is the implication? Okay, so please look at my screen. Okay, so I am taking first case where Henry where Henrik will invest $300,000. Okay, $300,000 entire himself and not gift anything to Kate. Okay, so now here please look at the question. The taxable income is already beyond 550,000. You can see that this is employment, this is within ISA, within ISM. So it is already beyond 150,000. That means Hendrik would be liable for highest tax rate, right, into the additional rate tax category, correct? Okay, so now whatever extra income that he will earn on the shares, that is at the rate 4%, and by way of interest at the rate 1%, correct, that would all be subject to highest tax rate. Clear? So let's do the calculation then. Okay, let's do the calculation. So I will do here first income tax on dividend income. How I know there is dividend income? There is it's written here, right, that the investment plan is 200,000 of these will be invested into shares that will earn 4% yield. What is the return earned on shares? Dividend, exactly, that's what I'm calculating. Then 100,000 will be left on cash deposits. So what do you earn on cash deposits? You earn interest payment, right? So exactly that's what we are going to do. We are going to be doing the interest payment calculations as well. Done. So now please do the calculations here. So income tax and in dividend income will be 200,000 is going to be the investment in dividend income that was mentioned, multiplied by 4% yield, and the highest tax rate for dividend income is 39.35%. Right? So what is the tax amount going to be? The tax amount is going to be, let's do the calculation, 200,000 multiplied by 4% multiplied by 39.35%. I get here, wait, Yeah, so I get here 3148. Right, 3148. Okay, now next to, this is the second part. Second part is income tax on interest income. Right, that is on the cash deposit. So you can see I'm not calculating tax on the entire income. What I'm doing calculation is I'm just doing the calculation on the additional income that he's going to be earning. Okay, so this is what we call as that we are not going to look into the entire tax. We're just going to look into the add-on tax. So here it is 100,000 multiplied by 1% was the interest, correct? And then the highest tax rate will be 45%. It's a non-saving. It's the income to which we apply the normal tax rates. So 100,000 multiplied by 1% multiplied by 45% is 450. Now add it together and you get the total tax due. Right? So total tax due is 3148 plus 450. 3598. Am I clear? If there is any questions, any queries, guys, feel free to ask me. Okay, so now here I have 3598, which is there. Now let's go to the next part. The next part is the second one. That is if Henrik give gifts to Kate. So that is the B part. Henrik gives 150,000 to Kate. And Kate has income which is in the basic rate band. Kate does not have income even in the higher rate band. So she still has a lot of scope to save taxes. Okay, now let's see. Okay, let's see what will be the impact. So what will be the Hendrik income tax liability here and what will be Kate's? Because Hendrik will have 150,000 with him and Kate will have 150,000 with her. Shares investment will be 2 by 3 of this and cash deposit will be 1 by 3 of this, correct? Shares dividend rate is 4%, interest rate is 1% on deposit. Same rule we are going to follow. So here first, income tax for Hendrik will be now 100. Same calculation you're going to do, just that 300,000 will be replaced with 150,000. Multiplied by 2 by 3 because the ratio will remain same. Okay, and multiplied by 4%. Then multiplied by 39.35%. Right? With this is on shares. On cash deposit, it will be 150,000 multiplied by 1 by 3 multiplied by 1% multiplied by 45%. And you will get the total tax liability of Hendrik. Okay, let's do the calculation. So 150,000 multiplied by 2 by 3 multiplied by 4% multiplied by 39.35%. I get here 1574. Okay, I get here 1574. Now, 150,000 divided by 3 multiplied by 1% multiplied by 45%. I get here 225. Done? Clear? Now add the 2. And I get here 1799. So this is the total tax liability for Hendrik. Now let's do the tax liability for Kate. So here, second part, income tax for Kate. Same calculation. It is just that Kate is also enjoying the the rate bands. That's all. So if we talk about shares, what is the income going to be for Kate? 150,000 multiplied by 2 by 3 multiplied by 4%. Let's see this, because if it is within the limit of BRB, then we don't need to apply 40%. We can simply do with 20% as well. Okay, and for dividend income, it will be 8.75%. Okay, so let's do the calculations here. Okay, now for Kate, 150,000 multiplied by 2 by 3 gives me 100,000 multiplied by 4%, gives me only 4,000. So 4,000 is the dividend income for Kate, which is within the limit of BRB, as Kate only has the taxable income, which is 15,000. So she still has a lot of BRB remaining. So we can simply apply 8.75% here. Why? Because dividend tax rate is 8.75%. Right? So 4,000 multiplied by 8.75%, we get here 350. Okay, now let's do the next one for cash deposit. 150,000 multiplied by 1 by 3 multiplied by 1%, and is it within the limit? For that, let's do the calculation. 150,000 by 3 multiplied by 1% gives me only 500, and which is within the BRB limits, right? As we can see, the BRB limit is still 37,700 and taxable income is only 15,000. Here dividend was only 4,000, total 19,000. So we still have a lot of BRB remaining, right? So definitely it will be in that normal tax slab. So we will apply tax at the rate 20%. But wait, we don't need to even apply tax, because this is coming as 500 and 500 is the nil rate band. 500 will be covered within the nil rate band. Right? Savings nil rate band will be available here. Why? Because already the cash which is covered by ISA, the interest income is 800. So she has the savings nil rate band available. So here I will do 0% and I will get 0 here. So total Kate's income tax liability is 350. Now wait. Yeah, so we need to change these figures also. Just a minute. Because we will get dividend nil rate band also. No? Here also we will get nil rate band. So I will just give one understanding. Wait. So here I will do, just guys look here, we have not taken the nil rate band. So nil rate band will be available here as well. So, okay, correct, as dividend is subject to nil rate band for every taxpayer. So let's do the calculation here. 150,000, even in the previous calculation, here also I will just do the correction. 200,000 multiplied by 4% gives me 8,000. But 500 will be nil rate band. So 800,000 minus 500 we will do for 39.35%. Why? Because 500 is covered in the nil rate band. Right? So let's do it. 7,500 multiplied by 39.35% gives me 2,951. So here we will just have some changes. 2,951 plus 450 gives me 340. Okay, and here also we will do the changes for Henrik. So 150,000 multiplied by 2 by 3 multiplied by 4% gives me 4,000. So here also I will remove 500 for the nil rate band, and then I will multiply 39.35%. So I will get here 1377. The reason being, nil rate band is available to every taxpayer. So just look here, even while doing question, I realized that okay, there is a change to be made. So in Excel, you always have the benefit where you can make the changes like that directly, and you can do the linkings. So you may change it one place and all the other places get changed instantly. Okay, so now here total will change. It will be 1377 plus 225. Which is 1602. Okay, now for Kate also it will change. 150,000 multiplied by 2 by 3 multiplied by 4% gives me 4,000. So here also I will take 4,000 less 500. Okay, so it will be 3,500 multiplied by 8.75%. I get here 306. And this is already covered in the nil rate band, that is the savings nil rate band, as the income is already less, so savings nil rate band is there. But for 100K, since he's in the additional rate category, savings nil rate band is not available. Correct? So we have got these. Now get the total tax liability. So total tax liability is 306 plus 1602, right? Which is going to be equal to 1908, right? And the initial tax liability under first option was 3401. Now it is 1908. So what is the saving that we can write? So taxes saved under option 2 is equal to 3401 less 1908, right? Which is equal to 1493. So your taxes saved are 1493. Am I clear with this? Absolutely. Anybody with any queries, don't hesitate, type it in the chat box, but this has to be absolutely crystal clear to everybody. Okay, it is your planning question, so you have to be absolutely clear about it. Okay guys, then I think it's good that we move over. So we have done the first question. It was worth 7 marks. Yes, for 7 marks we did this question, an easy one with no technical steps practically, and what we had was just simple steps. Now let's take the next one. So this is again a very good question. Question number 16. But this is a very simple question. So I think even, we can just do it here simply. You should assume that today's date is 1st September 25. So I'm just taking random personal tax planning questions. Okay. Are you ready to do this? Can I ask you to do a calculation? Let's do question number 16. So all of you be attentive. Let's try to do a question. Just type in yes if you're ready to do. Type in yes if you're ready to do. Very good. Anybody else? Okay, let's do it then. You should assume that today's date is 1st September 2025. Daniel is employed by Foster Limited, currently earning a salary of 45,000 a month, per annum. He has been offered sole use of a company car, or alternatively, option number 2 is a loan to enable him to purchase the same car himself. No worries, then I will be solving it, don't worry. Okay. So option number 2 is to take a loan to enable him to purchase the same car himself. So first way is where he is going to be using the company's car. Second option is that he will get a loan, and through this loan he will buy a car and then he will be using it. So basically meaning to say that first case is a case of classic case of car benefit, and second is a case where there is going to be like no car benefit, like that. Okay, so now here he has been offered the sole use of a company car, that is option number 1, and alternatively a loan to enable him to purchase the same car himself. Under either of the options, Daniel will pay all fuel cost of the car himself, which amounts to 60 per month. So for a year it will be 60 into 12, which is 720. Okay, and very important point to note, all fuel cost is borne by Daniel himself. So employer is not reimbursing, so no fuel benefit will arise here. Clear? Okay. Now alternative 1, alternative 2 are given to you. What is the requirement? Calculation, prepare the calculations of Daniel's net spendable income for 25-26 under either option. 9 marker question. What do we mean by net spendable income? Net spendable income simply means your leftover income. Like Like you get salary, you have all the deductions, finally you get a cash balance in your hand. So net spendable income simply means the income that is available for him now to spend. That's like the cash earnings. After adjusting your taxes, NICs, any expense payments, any outflows, what are you left with that you can use for your own spendings is your net spendable income. Done? Clear? Let's do this question. Very simple, very simple question. Okay, but it's a 9 marker. So now let's do it here. I'm doing question number 16 here. So I'm doing option number 1. Option number 1 is company car. And understand we have to get the net spendable income. So our starting point, this is option number 2. Here I can do this also parallelly. Option number 2 is loan. Okay, because we have to calculate the net spendable income. So pro forma will remain same. Always your starting point is salary. Okay, so your salary is 45,000 here. That will not change. Clear? Now, let's do the adjustments by looking at the question. So always prepare your performer, your format that helps you to know the overall structure of the question, right? So the solving becomes very, very convenient. Now the next one. Foster Limited would purchase the newly registered car on 1st October 25 for 9,800, which is 500 less than the list price. So, okay, Foster Limited is going to purchase. Fine. The car would then immediately be made available for Daniel for his exclusive private use. So we need to calculate the car benefit because it will be used to calculate income tax liability. Nowhere in the dispensable income or nowhere in the disposable income or spendable income, but we will only use it to calculate the taxes. That's all. Okay, because practically the employee is not paying anything for it, neither is he receiving anything in cash. What he's receiving is the car use. Clear? Now, so there's going to be a CO2 emission of 97 grams and it's petrol powered. Daniel will contribute 50 per month towards private use of the car. So it's an expense, right? And Daniel is getting the car on 1st October. So the expense is not going to be there for 12 months. It is only going to be there for 6 months then, right? Only 6 months. Because 1st October is the midway. So now here this also is an expense 50 into 6 which is 300. Foster Limited would give the car to Daniel after 3 years when its market value is expected to be 4,000. Okay, now what we are required to calculate is the net spendable income. So from this I can first reduce the expense that I know, that is fuel cost and contribution. Fuel cost was 360, contribution was 300. This I know directly, I can reduce it. Less again now will be income tax and will be NIC. Okay, and finally you will get your net spendable income. Okay, now what is income tax? Let's calculate. So here we can have working calculation of income tax. Okay, so now let's do the calculation of income tax under this case, but for that first I need to calculate the car benefit, right? So let's calculate car benefit. Let's list down everything. What is list price? Now do I take the reduced price or the list price? I always take the list price. We never take the reduced price, right? For this we have already covered this on employment income. So now here I am taking the list price of the car. The list price of the car is 9,800, which is 500 less than the list price, right? So list price will be 9,800 plus 500, which will be 10,300. Okay, now what is the CO2 percentage that we will take? It was 97 grams, so you will round it down to 95 less 5 divided by 55. right? So that will be equal to 95 less by divided by 55 is 16%. Oh, I'm sorry. I wrote opposite. 95 less 55 divided by 5. So that will be 95 less 55 divided by 5 is 8. So with 16 we will add 8%. Right? With 17. 17 is the base percentage. So with 17 I will add 8%. So my CO2 rate will be 25%. Now you know everything. Now calculate car benefit. So car benefit will now be equal to 25% of list price. This you will take for 6 months because car was only there for 6 months. From this you will reduce employee contribution, which was 50 into 12. Correct? Set the performer, now get the answer. So 10,300 multiplied by 25% multiplied by 6 by 12 less 300 gives me a figure around 987.5, which we round off, it becomes pound 988. Okay, we have done these basic calculations already in the respective chapters. I'm not explaining them. We're just putting them in place here. Now I know my car benefit, I know my salary, so we can calculate our taxable income in according to the tax liability. So let's calculate taxable income. Here I will write calculation of taxable income. This was my working note 1. In this it was first car benefit, B is income tax, taxable income and tax liability. Okay, so here your salary income is 45,000. With this you will add car benefit, which is 988. So your net income comes out to be 45,988. Now from this I will reduce PA 12,570 and I will get my taxable income. Taxable income will be 45,988 less 12,570 and it is 33,480. Done. When you know your taxable income, it is within the BRB limit, so just apply 20% and you know your taxes. So here my tax will be 33,418 multiplied by 20%. That will be equal to 6684 approximate. 6684. So here I will reduce 6684. Now we have to calculate NIC. How would you calculate NIC on the earnings? It is never calculated on the benefit. Right? We know the earnings. What are the earnings? The earnings are given to you here. That is the salary income is 45,000. So you simply do the NIC calculation here, which will be 45,000 less the base rate is 12,570 multiplied by 8%. That is the tax rate for, that is the NIC rate for employees, right? 45,000 less 12,570 multiplied by 8% gives me 2,594. So that's all. We have got the NIC also. Now let's reduce 2,594. In fact, NIC will be same for both. The reason being it is based on salary. It is not based on benefits. So if there is no benefit, then it is the same. Right? So net spendable income here would be 45,000. Now adjust everything. Less 360, less 300, less 6684 and less 2594. So my spendable income is coming out to be 35062. Okay, very good. If you're doing it yourself, if you've got the same answer, then guys, you're doing fantastic. Very good, very good. Okay, let's take the next one also. So now here my salary is 45,000. That's the starting point. But remember here car is not provided car is not a company car. The loan is given to him, so he will receive loan, but that loan will go out to purchase the car. Got it? So there's going to be inflow and there's going to be outflow as well. Foster Limited would provide Daniel with an interest-free loan of 9,800 and the car will also cost 9,800 after discount. So here I will write add loan 9800, but less purchase of car, 9800. There will be less fuel cost because that will be common for both, 360. Let's see if there is anything else. Otherwise, we will reduce income tax and we will reduce NIC. This is not going to be a benefit because 9800 is within the limit of 10,000. So beneficial loan benefit will not be there. Okay, loan will be written off in 3 years time. That's okay. Assume Daniel would be able to negotiate the same discount. So that's exactly same. Now simply let's calculate income tax and NIC. NIC will be same because NIC will be calculated on salary only, which we have calculated in the first case as well. So NIC I can reduce to 594. But now let's calculate income tax. Calculation of income tax in option 2. Okay, what is the calculation of income tax? Let's do it here. So here I have my salary income 45,000. Now do I have any benefits or anything to calculate here? No, nothing. So my income tax will be, ma'am, simple. Your income tax will be very simple. You just have to reduce PA 12,570, right? And you will get here taxable income. Now taxable income will be 45,000 less 12,570, which is 32,430. Okay, which is within the limit of BRB again. So you just multiply it with 20% and your tax will be equal to 32,430 multiplied by 20%, which is 6,486. Okay, now you just take 6,486 here. Okay, now finally you can get your spendable income. Let's reduce 45,000 less 360 less 6,486 and less 2,594. So we get here 3,560. Okay, so the net spendable income in option 2 is coming out to be 3,560. Now tell me guys, which is a better option? To go ahead with option 1 or to go ahead with option 2? Of course, this is a better option because here the net spendable income is more by approximately 498. Though it's a very small amount, but still it is more by this. So then we can always suggest to the management that look, please go for option number 2 and don't go for option number 1. I hope now, Harsh, you are absolutely crystal clear with this and now you know how to solve the question. Correct? So if you have anything that you're not able to understand, ask me. Doesn't matter even if it's a first class or not, but asking will always make you improved, right? And all the other students, I hope you're having the clarity. Okay, let's take the next one now. 17th is a very interesting and very simple question, but let's do it here. It's, I think, on the EIS. It's on the EIS, so let's do quickly this question also here. Okay, now look at my screen. So I'm doing this EIS questions already done, so let's discuss it now. Rachel expects to have a taxable income of 75,000. That means she's going to be in the higher rate band, right? This point clearly tells us that she's going to be in the higher rate band. And she wishes to sell her ordinary shares in Fernwood Limited. She subscribed for 12,000 shares in Fernwood Limited for 20,000 on 1st January 2024. So she subscribed for 12,000 shares and she subscribed for 20,000. Now, when we do the subscription in EIS, it is within the limits of the EIS. That allows for 100,000 limit and it is within the limit, right? Now, she has done an investment of 20,000. So by the nature of income tax relief, she will get a relief of 30% or otherwise whatever is the tax liability coming. So see, this 30% will definitely be less than 40% that is going to be applied under HRB scheme, correct? So I know it's going to be only less So this way also even you can do interpretations. Okay. So now what is the amount? 6,000. So 6,000 is the amount which is going to be the income tax relief that she is going to enjoy. Now, these all calculations you should also do once you're reading the question only. It really helps you a lot in solving questions. Now, on subscription, she obtained an EIS tax reducer of 6,000. That is already, we have checked the calculations here. She is intending to sell all her shares for 10,000. That is, the selling price is 10,000 on 1st August 26 and will relieve her loss arising on the shares in the most tax efficient manner. Okay, that means we will use it for the most tax efficient manner. Every year, Rachel realizes gains on other disposals in excess of AE. What does this line tells us? This line tells us that look, boss, there is no AE available. The AE is fully used by other gains. Okay, now, so explain with supporting calculations the tax implications of selling the Fernwood Limited shares on 1st August. See, why the date is quoted here? Because we know the rule is for 3 years. That is, within 3 years, the shares should not be sold. The shares were acquired on 1st January 24 and they're sold on 1st August 26. That's just more than 2 years. That's all. So is it meeting the requirement to hold the shares of EIS? No. It is not meeting the requirements. Hence, because the 3 years criteria is not met here. So here now we will have to relieve the income tax. So income tax relief will be withdrawn, and accordingly the other transactions will also follow. That we will just do here. Explain any advantages, disadvantages for Rachel for delaying the sale. So this is question number 2, and this is a 9-marker question. Yes, a paragraph only, and it is for 9-marker. So don't judge a question by the paragraphs that they carry. Correct. Okay, so here the question says that please tell us any advantages and disadvantages Rachel will have if she delays the sale. Okay, the main advantage is a 3 years period will be crossed. So first let's understand that if right now is the case where the 3 years period is not maintained, right? So it is the shares are sold within a period of 3 years only. Since the shares are sold within the period of 3 years only, and since it is not maintained, hence the income tax relief obtained will be withdrawn. And how much relief will be withdrawn? It will be, what is the sale proceeds? 10,000. We always calculate on 10,000 multiplied by the tax rate which we had used. So we had obtained the relief at 30%. I will multiply 30%. I get 3,000. So out of 6,000, 3,000 is the relief which is withdrawn, and remaining relief which is not withdrawn is 3,000. So both are 3,000 here, right? Now, what is the next question is, what is the loss? This is also a portion to calculate. What is the allowable loss that will arise? So please understand, how do we calculate the loss? We have proceeds, we reduce cost. And when I reduce cost, I will reduce the cost by the amount of relief which is not withdrawn. Go back and revise your EIS topic so that you have hold of it. Okay. So now, what is the proceeds? The proceeds are 10,000. What is the cost? The cost is 20,000. But from cost, I will reduce the amount of relief which is not withdrawn. The amount of relief not withdrawn is 3,000. Same amount only. So here I will have 10,000 less 17,000. So I will get a loss of 7,000. Done. Story over. If we delay the sale, then what will happen? If we delay the sale, the most advantage is that we will have no tax relief to be withdrawn. So no tax relief will be withdrawn, right? So here if we delay the sale, right? If we delay the sale, then no tax relief is withdrawn, but there will be a change in capital loss. Why? Only that change. So no income tax will be added, but the chargeable gains will increase or the allowable loss will decrease. How? Because from 10,000 you will reduce cost is 20, and from this you will reduce the income tax relief not withdrawn. And in this case, when 3 years criteria is met, no relief will be withdrawn, right? You will enjoy the entire income tax that you have already obtained relief for. You don't need to pay back to the government. Yes, it's yours now. But how government is recovering it? By giving you less loss. Government says, boss, you had a cost of 20,000, right? And income tax relief was not withdrawn. Reduce it fully. Now, how much you get your cost as? 14,000. 10 minus 14 is 4,000. So earlier you had a loss of 7,000. Just understand, overall you get the same implications. Loss was 7,000 and income tax relief withdrawn was 3,000. Net was loss of 4,000. 7 minus 3, 4,000. So here you are getting 4,000. The difference only lies in income tax rates and the CGT rates, which are different. That's all. CGT rates are lower. So they are more beneficial, they are lower. Correct? So this is how you are going to be solving this question. Okay? Any doubts, any queries, guys? Feel free to ask me. Put it in the chat box if you have any queries, any questions. Okay. Okay. Now, this question is going to be homework. All of you, those are intending to write, guys, you can do one thing. You can just take a look at this question. You can take a screenshot of this question. Yes, you can write your answer, create your answer, write down your answer, and it is approximately for 8 marks. Okay, so write down your answer, create your answer, and you have my WhatsApp number in the description box. You send that answer to me for evaluation. I will evaluate it and I will tell you that how is your answer, where you're falling weak, how you should be improving your answer. Okay, yes, so you take down my number from the description, WhatsApp me your answer. Only for question number 18. It's a very good question. Write it properly. Okay, let's take the next one now. Yeah, we can do question number 20. It's a very good question. Let's try this. I am skipping question number 19 right now. This we will take up once the IHT is done. Since we have not covered IHT so far, so therefore I'm not taking question number 20. Okay, I am taking question number 21. Extremely good question. Okay, now let's start solving it. So all of you, sorry, 19 I'm not taking right now. I'm taking question number 20 here. Okay, and you have anything you can ask me. We'll come back to 19th question in some time when we will be on the IHT chapter. We'll understand about the overseas portions. Then we will come back to question number 19. Extremely important and a good question. So quickly let's do question number 20, and it is also for 14 marks. So very good question. Okay, so be with me here. You should assume that today's date, and it is an exam, it is a past paper question. So here I want to highlight that, guys, this is a past paper question. So you have to take it with like utmost seriousness. Okay, now let's do it. So you should assume that today's date is 1st September 26. Celestia Company is a UK resident quoted trading company. Okay, And there are few portions, but do I need to read them now fully? As it is, I will forget them, right, by the end of the question. So why don't we reverse read it? Whenever your questions are 25 markers, 50 markers, it's always preferable to reverse read them, okay? And do the exhibits, read the exhibits only when you require them for surveying. That's all. Don't read them in like advance. Okay, let's read question number 20 requirements. Requirements. Explain the tax implications of Priya if she is acquiring 5,000 ordinary shares in Celestia company, or alternatively by means of a transfer on 1st November 26, or as a result of exercising the share options. So here we have options. Remember the share option schemes? That portion will come here. On 2nd November 29. On the assumption that, so first option is getting the shares, second option is getting the options, simple speaking. On the assumption that she sells the shares as planned on 10th November 29, calculate Priya's net increase in wealth under each alternative. Professional marks will be awarded. Okay, professional marks will be awarded for the demonstration of skill in analysis and evaluation in your answer. So this is going to be giving you like 2 markers that is given here. So how do we evaluate for analysis and evaluation? Analysis and evaluation means getting deeper into the question, okay? Getting very deep into the question and just, draw out all the conclusions that you can from the data which is made available to you. So draw out all the conclusions, and that is what analysis and evaluation talks about. Okay. Now let's start reading it, and now we know about that we have to look into both the options. So let's read the data and let's do option number first, and then we will do alternative 2. Okay, this is how we will be progressing ahead. Now, Celestia Company is a UK resident quoted trading company. Priya is employed as the finance director of Celestia Company and earning a gross annual salary of 165,000. Has no other source of taxable income. She is already in additional rate band. Has been offered 2 alternative ways to acquire the shares in Celestia Company. In either case, she will sell these shares on 10th November 29 when their market value is expected to be 32.7. Uses her annual exempt amount for capital gain tax purposes every year. She doesn't have any a year remaining. First alternative, Celestia Company will transfer 5,000 ordinary shares, 1% holding, not 5%, okay, to Priya on 1st November 26, for which Priya will pay £1 per share. The market value of these shares on 1st November 26 is expected to be 24.5 per share, market value. Celestia Company does not expect a dividend in the foreseeable future. Okay, so now how to solve this question? Alternative 1. Okay, now first let's see what are we required to calculate here. Okay, what are we required to calculate here? We are required to calculate what is the impact that is going to be there in our wealth. So what is going to be the net increase in wealth? Okay, net increase means whatever the proceeds that she is receiving from the share, whatever the price that she paid for the share, whatever is the income tax, whatever is the NIC applicable, and like here there is share, so whatever the CGT applicable. After adjusting everything, now what is the net wealth position? Okay, that is what the question is focusing on. That's just like your disposable income. Okay, and yes, on the same lines only, there is no change. It is the same lines only. Got it? Okay, now let's do it here. So first alternative here we have. Now, the question tells us that she is an additional rate taxpayer, correct? Now, if you can see the market value on the day that she received the shares, I'm sorry, just 1 minute. Guys, can you see my screen now? No worries, we just read through this question. So I'll give you 2 minutes, guys. Everybody, please just read through this question. Did not realize my tab just went away, my app. So all of you, I think the question was not visible to all. I give you 2 minutes, please read through the same. Yes, yes, yes. Apologies for it. I did not realize it. You should have even, you can just put it in the chat box. I would have realized that time only. Okay, anyways, I'm giving you 2 minutes. Just go through the question quickly. Okay, I think everybody's read through it. Okay, now, yeah. So now let's do it. So let's start solving it. Okay. Yeah, so here we have, let's do the first alternative. First alternative would mean that we are looking for when the acquisition of shares will take place through the transfer of shares and not through options. When they are transferred through shares, so I want you to refer to your share schemes. Okay, I want you to refer to the share schemes. Right, the share schemes that we have covered along with the share option schemes. So when there's a share scheme, the taxing will take place first at the time of grant. No taxing will be taking place at the time of grant. Number two, it will take place when you are exercising the option, and number three, it will take place when you're selling of the shares. So when we are exercising the option, that time the market value is 24.5, right? But the price at which Priya will obtain the share is only £1, right? So the price at the market value on the grant date and market value on the exercise date, the difference will be added to the income of Priya. Okay, so look here how the taxability will take place. So here I will write income tax liability on shares exercise. Okay, so income tax liability on shares exercising will be, there are how many shares in total? There are 5,000 shares, right? And 1 and 24.5 is the difference. So we'll take 5,000 multiplied by 24.5 less 1. So I will get the increase, and that is going to be a taxable income, not a benefit, but it is going to be added to the salary income only. You can say that. Yes, and it will be added there and it will be taxed accordingly. As she is already in the additional rate band, so the tax rate will be 45%. What is the tax coming? 5,000 into 23.5 multiplied by 5,000 multiplied by 45%. So I am getting the tax as 52875. When there is income tax, there is going to be NIC also. So NIC will be equal to, now NIC you will calculate on this amount only. Yes, you will calculate. Why you will calculate? And it is an additional amount. See, because the salary is already 165,000, that is crossed the NIC limit of 50,270. Okay, let me just go on. Okay. Yes. I don't know why it happened, though it doesn't happen, but maybe today universe is saying, boss, too much of studies. Stop. But I'm telling universe, boss, I cannot stop. I have to do few questions and make you guys like perfect as a butter on the bread, as smooth as butter on the bread with your exam prep. So I cannot allow you to be not having the session. Okay, so I will keep on trying. I don't know, just okay. Let's just take 1 minute break. I will just resolve this. Okay, wait, I will just resolve this. So let's just take quick break of a minute. Yes, guys, I'm back, and so you are, I'm sure, with the question. With a lot of twists, turns, and everything. Now we are back with the question. Okay, so without wasting any time, let's start doing it again. So, first alternative, see, every time when you do a question, your focus is only on tax calculations. With tax, NIC is a free gift. So don't forget you have to always calculate NIC whenever it is applied, right? Now your question will never ask you to calculate NIC, taxes, nothing. You can see in these questions. Like in this question, the requirement is that you have to calculate the net increase in wealth. Right, so it is same like disposable income. Simply, okay, so it is the same thing that we are doing, just twisting the words. Okay, so don't be caught in this trap. Okay, anyways, let's do it. So now, first thing you heard me when I was saying that, so I'm sure now you have a hold of it. That is number one, that ma'am, in as per the share schemes, we get taxed at twice, 2 pointers. Number one is the exercising point, and when the shares are exercised, and number two, when you sell them further and you have a CGT calculated. Same thing we're going to do here. When you exercise the options, the earnings that you have will be added to your employee's salary. Just like in India, when you tax it, your pay is calculated, right? When you have ESOPs and all the other options. Though here we're talking about the share schemes. So exactly on the same line, it will be added to your salary income as well. So now here, when we are exercising, the income tax liability will be, what is the market value on exercise date? Market value is 24.5, less market value on grant date. 1, reduce it. Multiply by 5,000 shares. And since the taxpayer is already in additional rate taxpayer, hence we will simply multiply it with 45% the tax rate. One liner, done. You got your tax liability. Do it and I do NIC calculation on it. See, the taxpayer is already in the additional rate category. So the 8% band you've already used. Now, whatever income that you have is over and above that, right? So you will have additional 2% calculated. Done. So what is this amount? So you will calculate NIC on 5,000 multiplied by 24.5 less 1 multiplied by NIC rate will be 2%. Simple. Please do the calculation exactly in the same way, and always use simple ways to do calculations. Don't unnecessarily complicate it. Right? So now here I will have 5,000 multiplied by 23.5, sorry, 23.5 multiplied by 2%. I will have 2350, which is the NIC amount. Done, got it. Now what else? The shares are being sold on 10th November, the question mentions. So you will have CGT also calculated. Now, how would you calculate CGT? For that, get the market value on 10th November 26. The market value on 10th November 26 is 10th November 29 when the shares are finally sold. Is that given? I am not able to find it. 32.7. Right? The market value is 32.7. And for us, we have already taxed for the period between grant date and exercise date. Now your taxing will take place between exercise date and sell date. Right? It's a sequence that follows. It's very logical. If you take the grant date only, then it's a double taxation that will take place. So therefore, take it in steps. Right? Grant date to sale date. So now you will take the difference for 5,000 shares multiplied by 32.7, not 32.5, multiplied by 32.7 and less 24.5 multiplied by CGT rate. Now that's a very interesting point. Ma'am, what rate should we apply? 18? No, BRB is crossed. 24? Yes. But what about BADR? What if BADR relief can be there? Because there's a share sale. So we can have BADR also applicable, right? But for BADR, we want the holding to be minimum 5%. Very good. To be minimum, sir, how much? 5%, ma'am. So then is it 5%? No, ma'am, it is 1%. BADR will be available? No. And whatever I'm speaking orally, you don't have to only listen, you have to write it in the exam. You have to write it over there that BADR can be an option, but it will not be applicable. What will this help you? Not just gain your regular marks, but your skills marks of analysis also. So what is analysis all about? Analysis and evaluation is all about this only. Is all about analyzing and evaluating and commenting. So whatever I'm speaking orally, you have to write it down. That's all. No fancy writing, simple writing. Okay. Now, what should I multiply it then with 24 or 14? 14 cannot be there because BADR is not applicable. So I have to simply multiply it with 24%, the highest tax rate only. So that will be equal to 32.7 less 24.5 multiplied by 5,000 multiplied by 24%. So that gives me a CGT. Okay, that gives me a CGT of 9840. Okay, 9840. Done. So we're done with the income tax, we're done with NIC, we're done with CGT. I don't see there is anything else. It is so in order to know the increase in wealth, we will know what is the proceeds we are receiving, less how much we paid for, how much is income tax, how much is NIC, how much is CGT. Finally, what you have is increase in wealth. So let's calculate. So increase in wealth will be equal to, okay, what is the receipt from shares? Okay, what is the receipt from the sale of shares? Receipt from the sale of shares is at 32.7, right? So it will be 5,000 multiplied by 32.7. 163,500. Clear? This is the amount and this is the rate at which we're selling the shares. So this is the amount that we're receiving. Now from this I will reduce price paid to buy shares. We have paid one point, right? £1 multiplied by 5,000 shares. So we will reduce 5,000 from, right? Less income tax, the additional income tax, less NIC, less CGT. We have all calculated it, just reduce it. 52,875, 237, 52,875. Then 2350 and then 9840. Whatever we calculated, I'm just reducing it. Finally, you will get your net increase in wealth. So let's calculate it. 163,500 less 5,000 less 52,875 less 2350 and less 9840. So you get here 93,435. You got the increase in wealth under option number 1. Now let's do under option number 2. What is the increase in wealth? So now number 2, option 2. Okay, we have to calculate the increase in wealth under option 2. Now let's do here. So what is the second option? Let's read it. In case guys you have a query, you have even slightest of any questions, put it in the chat box and I will be taking it. Don't worry about it. Okay, anyways, let's go to the question. So the second option is that Celestia will not receive shares. The Celestia company will not give shares to the employee. Instead, will give share options. So we have already done share option schemes. It is that part. Okay, so Celestia company will grant options over 5,000 ordinary shares to Priya on 1st November 26. And under its newly established EMI schemes, guys, remember EMI scheme, we have done those 4 or 5 schemes. It is one of that scheme. Exercise price of these options will be 23 per share. Very interesting question. So now first thing, what are the taxing points here? Will we have tax on the grant of the scheme? Will we have tax at the time of granting of the scheme? Okay, so for that there's one. Now let's see, for EMI schemes we have to see few criteria. Number 1, the value of the shares on the date of grant should not be more than 250,000. Only then they will be eligible to be covered under EMI scheme. Point number one. And whatever I'm saying again, boss, what you have to do? Write it in the exam. Very good. So first point is, please write it and mention it and explain to the examiner that you know about the EMI scheme. So what is the market value on the grant date? The market value is 24.5. Now 24.5 multiplied by 5,000 gives me 122,500. Correct? Is it more than 250,000? No, it is within the limit. So yes, we are eligible to go for EMI schemes. What does this imply? If EMI scheme is eligible and we are within the limit of 250,000, so at the time of granting of options, there will be no tax calculated. No tax calculated. And when is the shares getting exercised? As per the above question also, shares are exercised on the share options are exercised on 2nd November 29. Right? The share options are exercised on 2nd November 29. So at the time of this exercising, now the tax will be borne for the difference. Just like we have done for the shares, it is just that we will do the same for options, but only at the time of exercising of these options. Exactly the same lines, but see how do we do it. Okay, the important markers or the calculations are needed. Again, okay. So now I'm doing option number 2. First part I'm doing is calculate, just like we've done in that case also, calculation of tax liability at the time of exercising. So first thing is calculation of income tax at exercise of options on 2nd November 29. Right? So how do we do it? Almost on the same lines, but a bit different on the calculations. Okay. So let's do it here. 5,000 is the number of shares multiplied by what is the market value on the grant date. The market value on the grant date is 24.5. And the question gives you here one more market value. The exercise price is 23. Right? The exercise price is 23. So when we calculate the income tax liability and the NIC, we will always take the difference only in case of EMI shares, because we have got the benefit on the grant date, correct? So we will take the difference between market value on the grant date and market value on exercise date and multiply it with 5,000 shares. So the amount that you will get, okay, the amount that you will get, we will check. Wait, first I will do this, then I'll tell you the chargeability. Chargeable amount. What is the market value on grant date? 24.5. What is the market value on exercise date? 23. Multiplied by 5,000 shares. So how much do you get? 7,500. Right? So 7,500 is my the excess amount. Correct? Are you with me, everybody? Please revert back. Till this point, are we clear? Okay, great. Okay, so now we know this is the chargeable amount. Now what is the income tax on it? So income tax will be simply you will multiply 7,500 into 45% and NIC will be 7,500 into 2% because they are EMI shares. So they are EMI option shares, they are meeting the requirement. So we are getting this benefit, right? So this is a very big benefit because we save the taxes between the difference between 1 and 24.5. Right, so that is what is the benefit when you go for an approved options. Clear? Now let's read this. So 7,500 into 45% is 3,375 and 7,500 into 2% is 150. Total you will get here 3,375. 3 threes. Oh, why I don't need the total because I will calculate with 12. Okay, this is one amount. Second is calculation of CGT. See, CGT will not differ because again you will take the difference between 32.7 and 24.5 only. So we had calculated it. Okay, I applied the rate only. So CGT will be same 5,000 into 32.7 is the selling price. Less we always do the market value on the exercise date because this is the last date that we have taken, which is 24.5. I'm sorry, we reduce it by the market value on the grant date. Market value on the grant date is 24.75, right? Wait, just so here what is 24.5 market value of the grant date, and actually that's an exercise date only here. Here the exercise date is 2nd November, right? 23. But when we calculate the chargeable gains, we will always calculate chargeable gains for the difference between the price at the time of selling the shares and less we will always do the price which is there at the time of granting of shares. Okay, always. So the granting of shares is at the market value of 24.5. So the same we have taken multiplied with 5,000, it will be same, it will not change. But the only question is, ma'am, what tax rate we will apply? Should we apply 24 only or can we apply 14 also for the BADR relief? Again, this is going to be written by you in the exam, boss. Whatever I am speaking, no, convert it into text. So what you will write it over there? See here, will we get BADR relief? Yes, my friend, but why? If you remember in BADR, we studied that in case of EMI shares or EMI share options, they enjoy a benefit. For in order to be eligible for BADR, 5% is not a criteria for EMI shares. The only criteria they need to meet is that they should be held for at least 2 years prior to the date of disposal. So now let's see whether they were held for 2 years or not. Disposal took place in 10th November 29. So 10 November 29 disposal took place. The shares were acquired in November 26. Is it beyond 2 years? Yes. So the criteria are met? Yes. So even if 5% is not met, can BADR be given? Yes, yes, yes. Okay, can BADR be given? Yes, my friends. So what rate I will apply? 14%, ma'am. What is the amount that I will get for CGT? 5,000 into 32.7 less 24.5 multiplied by 5,000 multiplied by 14%. So I get a CGT of 5740. Now again, ma'am, back to the same question. What is the increase in wealth? Now let's write it here. So increase in wealth will be receipts from shares 163,500, that is going to remain same. Okay, less cost paid. Now here we have not paid cost at the rate 1, we have paid cost at the rate 23 exercise, right? So 23 into 5,000. Yeah, that's a bigger amount. 5,000 into 23, that is 115,000. Right, that's a change point in options because at what price do you exercise them? Then less income tax, less NIC and less CGT. Income tax is 7,500. No, income tax is 3,375. It is 150. Then CGT is 5,740. How much do we get a net increase in wealth? So net increase in wealth is 163,500 less 115,000 less 3,375 less 150 and less 5,740, my friends. So how much I get? Only 39,235, even if EMI options are so beneficial to us, right? So which is the better option? Which is a better option? The better option is obviously, see, we have recommended that both the options will have the increase in wealth. Like here it is 39.235, and in the first case the increase in wealth was 93,435. So if she has to make a choice between the options, of course it's better to go ahead with the option 1, because the net increase in wealth is much more here. So we are done with question 20 now, with almost 4 to 5 questions that we have done today in the session. I'm sure you've got hold of it, that how to handle these questions, the kind of planning questions in exam. Yes, I'm not taken typically a 25 marker because there are a lot of topics that are still not completed or that you all need to be completing, right? Because right now I'm not discussing the revision of the syllabus. Whether it's doing a part is personal tax planning, where the focus is on employment income, property income, the schemes, shares, investment plans, and so on. So there is a very good question that I would like to give you in homework, because no class is there, Anshuma, where you don't get homework, my friends. So you have a homework of question number 21. Here, those who do not have this book, this content, and you want this homework question 21 from my end, you just type it in the comment section, question bank, and I will share the question bank with you, where you will get these multiple questions that we have done today along with the solutions of them. And the homework question 21 also, which is an extremely good question based on the calculations of pylon, which is a part of your termination payment, so which is a good question that you all should be attempting. Okay, so guys, all of those who are wanting it, once this video is uploaded and you can see it on YouTube, please drop your comments in the comment section first, for how was your experience in understanding this personal tax planning, and how are you now comfortable after understanding the same. So your feedback for the session will be most welcome, as it is going to be very encouraging. Plus, in case if you want the question bank copy, then please comment question bank and I will share the copy with you. Okay, thank you so much for joining today. See you all for the next session. And there is a surprise element for tomorrow morning as well. Not for tax and ATX students, but for PM students. In case if one of you, your friends are preparing for PM, tell them there is a surprise on my YouTube tomorrow morning, 8:30 a.m. Be there. Thank you so much for joining. See you all. Bye-bye. Take care. Have a great time. Study well, study hard. And if you want any help anywhere, connect with me on my WhatsApp. Thank you guys. Bye-bye. See you. Take care.